Hi, David Bassanese here, Chief Economist at BetaShares, and this is a snapshot of my latest market trends report. And just covering the markets through the month of April, it was actually a much better month for markets. We had the all-country World Equity Index rebounding 3.7%. That was after having declined by 2.8% in March. Helping in that regard was a decline in US bond yields. We had a big move higher in bond yields through March, but they pulled back in April. US 10-year bond yields down 18 basis points, back to 4.5%, and expectations of US rate cuts later this year just sort of building a little bit. Now, what was behind all of this? I think there are two key factors through the month. Firstly, an easing of the tensions between Iran and Israel. I mean, there was an escalation in the tit-for-tat exchanges between those two countries in the Middle East. Good news is at least they've stopped, firing missiles at each other, and there was some relief to markets. So that was point one. The other element in the United States, we had for the first time in several months, actually at least an inflation report no worse than expected. We had 3 months in a row where both the CPI and the consumption deflator measures were a bit higher, and then we got the numbers for April and they came in line with expectations, and the core consumption deflator was actually a little bit lower than expected. So again, some relief to markets. That inflation in the US is still continuing to come down. Meanwhile, the economy in the US is still fairly solid, still pretty good consumer spending going on, pretty good labor market growth. So the soft landing scenario of inflation coming down without growth going into recession is still sort of holding up at this point. So from a global perspective, that's been the major developments. In terms of the Australian market, our market, again, not such a good performance. The ASX returning 0.9% in the month. That was after having declined by 2.9% in March. So we fell as much as global markets in March and didn't rebound as much in April. Hence the trend of underperformance in our market, sadly, continuing at this point. I think some of the local news that was important in that regard was the local inflation numbers, unlike in the US, still surprising a little bit on the upside, frustrating hopes that the RBA would be able to cut interest rates soon. And now markets have all but priced out any risk of an RBA rate cut this year. And in fact, if anything, a small risk that they may raise rates one more time this year, given the stubbornness of inflation. That's a situation at the moment. I mean, I think overall, I'm still pretty encouraged by the outlook. I think, slowly but surely inflation is coming down. I think central banks are expressing patience in waiting for that to happen, not trigger happy in terms of wanting to raise rates further and unduly slow economic growth. And so overall, I think it's still an encouraging backdrop for both bond and equity markets as the year progresses. That's it for now. And if you'd like to get more details on my market trends report, please visit the insights section of our website. And I'll see you again next month.